$12 billion moved in less than 48 hours. Not in taxes, not in aid, not in some slow government budget vote. This was a financial counterpunch, so fast and so aggressive that even veteran Wall Street traders had to stop and recheck their screens. And when it hit, one question instantly spread across America. What just exploded behind the scenes? Welcome back to USA Benefits Update, where we follow the money after the cameras leave and before the consequences hit your bank account. Today's not just a headline story. It is a pressure story, a survival story, and possibly the opening chapter of a financial chain reaction most Americans aren't ready for. Yet 4 weeks? The pressure had been building in silence. Legal deadlines closing in. Asset exposure growing by the day. Private lenders watching carefully. One wrong move, and billions of dollars tied to Trump-linked business networks could have been frozen, seized, or trapped in years of court battles. We're not talking about political embarrassment. We're talking about permanent capital lockdown. Money that could have become untouchable for a decade or longer, and this is where the counterpunch was born. Here is the clean, real explanation of the $12 billion move. Trump did not write a check. He executed a rapid conversion of vulnerable assets into liquid capital through accelerated asset sales, emergency debt restructuring, and private equity repositioning. That liquid capital was then pushed into financial structures that are legally harder to freeze, harder to intercept, and much more difficult to politically weaponize. In simple terms, money that was exposed was turned into money that could move, and money that can move cannot be easily trapped. The second that move became visible, everything shifted. Bond markets reacted within hours. 2 large lenders tightened commercial lending. The very next morning, small business loan approvals slowed immediately in multiple regions. And aggressive retirement portfolios saw quick volatility dips as institutional investors pulled back from risk. That's how fast big money reaches normal. People, why does this matter to you? Because when banks get nervous, they don't warn you. They silently change the rules. Loan approvals take longer. Interest rates jump without explanation. Credit limits quietly shrink. And benefit-linked funding slows before anyone issues a public statement. Then came the moment nobody saw coming. Midway through the capital repositioning, a sealed legal motion was suddenly fast-tracked in federal court. If that motion had landed hours earlier, it could have frozen multiple funding channels, mid-transfer, for nearly a full day. Insiders believed that the entire $12 billion strategy might collapse in real time. This wasn't public. This wasn't on the news. This was panic inside financial legal war rooms, phones exploding, banks demanding confirmation, legal teams rerouting transactions, minute by minute. And for the first time in this entire saga, Trump personally faced the real possibility that the very move meant to save his capital might instead trap it permanently. This was the pressure moment. If the freeze had hit, billions could have been locked in legal limbo for years. Payrolls tied to those business networks could have stalled. Debt obligations could have snowballed. And leverage once lost rarely comes back. At the final hour, the freeze was delayed. The capital cleared. The $12 billion move locked into place. Just before the door slammed shut, that's when the real-world fallout began. Within 72 hours, 2 federally supported construction projects were quietly delayed by months. A healthcare supplier paused hiring across 3 states. A multi-state logistics company temporarily cut overtime as banks tightened. Fuel credit access. This is how financial shock becomes human reality. Now imagine this. A family in Ohio waiting on a construction job that was supposed to start this spring. That job gets pushed back to late summer. Their savings were built for a 3-month gap, not 6. A medical clinic in Texas delays onboarding nurses because equipment financing got squeezed. Patients wait longer. Staff burns out faster. This is not abstract finance anymore. This is rent, groceries, medication, and stress. Supporters say the counterpunch was brilliant defense. Critics say it injected instability into already fragile systems. Both sides now agree on one thing. This move shifted power, and power shifts always come with consequences. Right now, warning signals are flashing quietly, not loudly. Mortgage approvals are tightening in specific income brackets. Auto loan rates jumped first for working-class credit tiers. Federal discretionary grants are being reviewed. Under tighter timelines. In years, what that actually means. In plain English, some counties may not know until late summer whether their housing grants even arrive. Some clinics won't know if their funding renews until after budgets are already stretched thin. Some families will see benefit processing slow, just enough to cause missed payments. Now let's talk directly to you. If you have a variable rate loan and rates spike again, your payment doesn't rise. Gently it jumps. That's how families fall behind suddenly. If your household relies on seasonal work tied to construction, logistics, or healthcare expansion, delays don't just shift calendars. They shift survival math. This is why awareness, right now, matters more than fear. Do not assume stability by default. Do not assume approvals will be as fast as last year. Do not assume rates stay flat just because headlines go quiet. Track your benefits closely. Watch your loan terms. Keep visibility on your cash flow. And above all, don't ignore subtle financial friction because subtle friction is always the first stage of bigger breaks. Analysts are split on what comes next. Some believe this counterpunch stabilized Trump's capital base and reduced long-term exposure. Others warn it has created a larger standoff between private leverage and regulatory authority, a standoff that could create repeated economic whiplash over the next year. And this is where the future impact really sits. This move may change how political figures protect assets under legal fire. It may reshape how banks price political risk. It may alter how aggressively federal agencies regulate major capital flows during high-profile conflicts. And most importantly, it may quietly tighten how benefits, grants, and infrastructure funding are approved going forward. Let's knock down the biggest myth spreading right now. This does not automatically crash the economy. And it does not guarantee strength either. This was a higher-risk survival maneuver. Higher-risk maneuvers only work if every piece of the structure holds under continued pressure, and pressure is not easing. Here's what is already locked in. As fact, $12 billion moved. Credit tightened. Approvals slowed. Timelines shifted. Funding models entered review. Those 5 things alone are enough to change daily life for millions of Americans over the next year. And that's why this story matters beyond politics. Because people don't feel power plays in headlines. They feel them in delayed tax refunds, slower loan processing, rising insurance costs, postponed housing builds, and benefit verifications that suddenly take weeks longer than promised. This was not just a financial counterpunch. It was a stress test on an already strained system. And for NatPast. But stress tests don't end. When the first tremor stops, that's why USA Benefits Update exists. We don't chase panic. We track outcomes. We follow the money after the cameras leave. And we stay locked on what actually touches your benefits, your household stability, and your future. If this breakdown helped you see what's really happening beneath the noise, make sure you stay connected to USA Benefits Update. Subscribe, share this with someone on fixed income or benefits. And stay with us because what comes next may not arrive with sirens. It may arrive silently. 1. Delayed deposit. 1. Paused approval. 1. Tightened rule. Because if just one more regulatory lever gets pulled, if just one funding channel tightens again, this $12 billion counterpunch could trigger the exact chain reaction it was meant to stop. And when that reaction begins, there will be no press conference, no early warning, no rewind, only impact. And we will be watching every second of it, right here on USA Benefits Update.